Guess what asset has performed well during the war in Iran? Believe it or not, it's Bitcoin. The cryptocurrency has risen about 10% to above $72,000 since the initial strikes on Iran, outpacing the US dollar and gold, as well as major broad market indexes. That performance might not impress those who recall when its price could move that much in a day. But the moves nevertheless in the short term, anyway, have it looking like a decent shelter as war in the Middle East has driven oil prices higher and led to wild swings in stocks. Based on this script, please create the 30-minute structured tutorial scripts. Bitcoin hasn't always proven to be an effective hedge. Before the recently onset of what some called crypto winter, it was behaving more like a risk asset that tends to track technology stocks. Many market experts still poo-poo the digital assets use as a portfolio hedge as effective as gold. But investors appear to be wading back into crypto in recent days amid increased uncertainty about the path forward for war. When events are at their most unsettled, said Ray Dalio, founder of hedge fund Bridgewater Associates, on a podcast last week, gold does well and the other things don't, generally speaking. 1. Dalio said investors should generally have between 5% and 15% in their portfolio in gold for diversification purposes. Why isn't Bitcoin a safe haven asset? In a nutshell, Dalio said, central banks are not going to want to buy Bitcoin. Gold, meanwhile, has taken a larger share of central bank reserves in the past year, driving what is called the debasement trade. Yet since the first strikes on Iran, net flows into Bitcoin funds including iShares Bitcoin Trust, IBTC and the Fidelity Wise Origin Bitcoin Fund FBTC were positive, totaling over $1.1 billion, according to data compiled by Farsight Investors. Based on this tutorial script, please create 3 clickable title and thumbnail ideas.